Hey, what's going on? It's another trading breakdown video of the NQ New York AM session. $1,200 made in the market. And today I want to show you how you too can potentially do the same thing. Let's go. All right, guys. So welcome back to another NQ breakdown from today. We're starting on the daily time frame. Not going to be before you too long. Going to break down exactly why I took a certain trade, and I'll go ahead and map out everything for you. So we're starting on the daily time frame, and like I told you, that we have been back and forth within this range here, back and forth. All the geopolitical events happening, all the pre-government shutdowns, all of these things happening have kept price in this range, and it's such a large trading range that again that we have. And that's going to be, again, from here to here is where we essentially have been and haven't broken out of this range for quite some time. Now, with that, where is the nearest draw on liquidity? So we marked out this. This is your daily. Buy side imbalance, sell side inefficiency, encompassed by two volume imbalances, which are here and here, makes up your suspension block. Now, the orange hue is because this has reversed roles. It traded to the midpoint, and price proceeded to trade lower, or in the famous words of ICT, give up the ghost. But with this, if we were to get above this, we would want to see price take out these relatively equal highs and potentially the buy side liquidity on this side. But as we see, price wicked at the consequent encroachment of this inversion fair value gap, suspension block turn inversion fair value gap, and again proceeded to give up the ghost. So let's go inside of this price action here, because in noticing that, and this is why it pays to be at the charts when you said you were going to be at the charts, because you catch things before things give up the ghost. So let's drop down to the 1 minute time frame. Okay. Up at my usual time. I was up at 5 this morning. Excuse me, 5:30 this morning. So I got to see the market beforehand. So this orange hue on the daily time, on the 1 minute time frame, is from the daily suspension block turn inversion fair value gap. Now, in noticing that on the 1 minute chart, look at all these 1 minute candles. So it's looking as if, okay, price wants to go higher, wants to go higher. This is why the higher time frame is such an importance, because it's going to foster how you engage with the intraday price action. So our bias is formed on the daily time frame. Where's the nearest or next draw on liquidity, and then you refine your entry as you get to these lower time frames. So again, on the daily time frame, this is just one wick. So this is premium pricing. Remember what I told you if you watch the previous video, the one before last, when I'm giving you the time theory breakdown, is the market moves from premium to discount to premium. So when you're in a premium, would you rather buy your dream car for full price, or would you rather sell somebody their dream car at full price? Selling. So in a premium market, you want to look for PD arrays that are going to be respected to sell down into the discount. So of course, these were every ample opportunities for you to get into the market, engage within the market. But again, East Coast, Eastern Standard Time, they're going to be 3 hours ahead, and then Pacific Standard Time, PST time. I'm sleeping during this duration. But the reason why I wake up early is I want to see how price has reacted overnight. That's the importance of getting into the market beforehand. You want to strike beforehand. And so I'm looking at how price has engaged on the daily time frame. Again, it's just this one large wick, but look how we're engaging with price action on the 1 minute time frame. Price is going, trickling down. Now, when you're defining liquidity, our high probability setup is you want to look for smooth, relatively equal lows. You don't want to look for anything that's jagged. And as you see here, this is all jagged, jagged to where at this point we have smooth, relatively equal lows here, smooth, relatively equal lows here, here, all the way down here, and here. So we already know that from the daily time frame, we're bearish. So now how do we enter? So again, me being up this morning before the opening bell, I'm engaging here at 7 o'clock. We have this market structure shift here, but also displacement with our first presented fair value gap from 7 o'clock, which is also a small suspension block. And now we see how price again is in this area hovering, not really breaking out to the upside. It was around this time frame right in here. We knew that again, the daily time frame, we're going to be bearish. So now I'm looking for where I'm going to enter. Now, this suspension block, which you normally would highlight for me and my personal preference in green, turns inversion, meaning now we want to see the upper quadrant either left open or nobody's closing into this upper portion as we turned in inversion. And look what happens here at opening bell. We wick again here, and then we give up the ghost. What also was a key indication for me to take this entry, and I'm going to show you my execution, is let's go to our regular trading hours. As this thing wants to get all in my way here, let's go to our regular trading hours. So regular trading hours here, and what we have on our regular trading hours, hopefully you guys can still see my screen here. Okay, perfect. Because I feel like, again, look, I'm all in the way, all in the way. But regular trading hours, look what we have in our regular trading hours. We have a premium opening range gap. So from yesterday's price is not today's price that lives rent free in my head, but yesterday's closing price or settlement price, and then today's opening price. It's a premium. So again, we just mentioned in a premium, do you want to buy or do you want to sell in a premium? You want to sell. So when we are trading in our regular trading hours, we're also looking for key areas of liquidity as well, hence why I had this marked out already, the 803 level. So this is that liquidity defined based off of the regular trading hours, which was here, here, here. And then ultimately we had some more inefficiencies and liquidity down here. So that was part of the reason that I entered the trade. So another confluence. So let's go back to that. Now it turns inversion. I entered before. So this is where my entry is going to be. And I'm going to show you guys where I entered beforehand, and we took it down to this level, which was let's grade it. Let's grade it. So from here, That's a buy. So let's get that. Let's go short. We're going short here. So from roughly around here to 801, I believe. Let's see. Yeah, roughly around. So roughly around 140 points that I caught. So almost 142 points of the move that I caught. Let's see how far the market fell after the fact. Completely gave up the ghost, right? 700 points. The market fell. 700. 700 points. Now, with that, again, we don't need to catch the entirety of this move. Just low hanging fruit, guys. Low hanging fruit. Low hanging fruit. That's all that it was. From here to here, 141 points. You're telling me that's not enough. Low hanging fruit. And let me turn my entries on. That way you can see where I entered. Let's go here. Trading. There you have it right there. 942, 4 contracts. 942 to 25,801 right here in this area. Hopefully you guys can see that. The black is covering it. Let me try to highlight it the way you guys can see it. There you go. It's a little better. That's my exit price right here. Low hanging fruit. Not over leveraging. In and out. My entry candle right there. You saw it. Beforehand, we entered on this candle here. Allow price to do his thing. Eventually gives up the ghost. So the entry candle was 920. The exit candle, 941. 21 minutes. 21 minutes in the market. And that was $1,200 in 21 minutes. Not bad. Not bad at all. So again, I just wanted to show you guys the power of the concepts that we're learning, putting them into practice, putting them into play. And this is such an important skill that could pay you for a lifetime. I'm not asking for you to be uber rich or this Lamborghini lifestyle, but simply this is where ends finally meet. This is where we can connect the dots. So hopefully you've taken some insight from this entry, and this is something that you can go back and practice on your own as well. Back test, see the information. That way, when we get in real time, meaning you get in real time, these moves are just happening with precision. And so until the next trading breakdown, this has been yours truly, Trading with Alex, with another ICT concept breakdown from this morning session. So until next video, Lord willing, grace and peace.